Okay, can you guys hear me okay?
Yeah.
All right, so you know the struggle with presenting on an accounting topic for any presenter is, I don't want you guys to fall asleep. I'm going to try to keep it interesting. The worksheets are here because I want you to retain what I'm going to say today, and there might be a lot coming at you, which I'll just say up front, depending on how much you know already, this might be all new information, and I wanted you to be able to remember it later. So, answers to the questions on the worksheet are in the slides. I will be covering all of it. But I also want you guys to just go ahead. I mean, you know, this isn't a huge group today, especially. So, like, if you have questions, please ask them.
Can I ask a dumb question?
Yes?
I didn't bring in a pen for my card. Is there like a pen up there?
Elens is the pen guy.
Appreciate it.
All right. Okay. So we're going to talk about cash flow management, how it pretty much solves every problem in a business. And if you don't believe me, we're going to talk about why. So first, we're going to talk about why most businesses fail, the 3 sources of money, which is going to be really important, especially for you startups out there, right? It's a numbers-based presentation. If you hate numbers, I'm sorry. It has to include the numbers. We're going to talk about the difference between a business that's a machine that you're operating and just a job that you own, okay? The importance of tracking performance and cash flow, and the 16 drivers of revenue, profit, and cash flow. And all that will make sense later. Okay. We're going to help you identify gaps in your accounting team, too, because I find that most people don't even realize that they don't have the right help when it comes to the financial side. Okay, so the good news, I start with bad news. Most businesses do fail. 1 in every 5 businesses fails in the first 2 years, and that's not to discourage you, because I'm going to show you today how you can not be one of the stats, okay? By the 15th year, only 25% of businesses really make it, so this is going to be important information. Why do you think most businesses fail? Anybody? These guys know the answer.
Lack of clients.
Okay, that could be, yes?
They don't have systems. Cash flow.
Yes, cash flow. Because guess what cash flow fixes? Pretty much everything. If you have cash flow, you can take care of a marketing problem. You can take care of a management problem. You can take care of a down market, right? You can make it through that. How many of you had to try to get a business through COVID? Like, that was tough, right? Okay. Sales problem. Do you need salespeople? Cash flow fixes that problem. You just hire them, okay? So really, if you have the cash flow, it does really solve every problem. So where do you get the money from? You have debt, investment, or from the business, okay? Let's talk about debt for a minute. It's not that debt isn't a good source of money, right? This can be credit cards, bank loans, vendors. How is it vendors? Delaying paying them, right. So it's, you know, these are your payables that are outstanding. So then you have your investments. So this is money coming from your savings or from someone else, from your in-laws, you're giving up a portion of your business, right, in order to get money this way. And then from the business, it's the money the business creates, okay? And it's not just net profit. We're going to talk more about that, too. This is the best way to get money. It's your revenue, less your expenses, less taxes, less debt payments, less customers that aren't paying you, less vendor payments. So, like, there's other things you have to think about. It's all the cash coming in minus all the cash going out. Okay, so that is different than your profit. All right, so clear winner, you want money from the business. Now, that doesn't mean that you can't use debt, because a lot of you startups, like, you have to go borrow money sometimes to get off the ground, right? But when do you want to use debt? Anybody know?
Expansion, you want to hire more people.
Right. You're making an investment. Your debt, you have to have a return on your investment if you're going to use debt. You have to, but you also have to know how are you going to pay the debt back, right? A lot of people are thinking, I'll just get this off the ground, but they haven't really done the work to see if they're going to be profitable enough and have cash flow to make the loan payments, okay? There's two things going on with businesses that are relying on their debt. Either they're going to make a lot of money from that debt or they're not going to make it. And sadly, a lot of the people that come my way are in the second category. They're spinning out of control a little bit with the debt. You know, when you start paying next month's, this month's bills with next month's revenue, that sort of begins to be a downward spiral. You don't want that to happen. So how do you make sure that you're going to have the cash you need? We're going to turn your business into a money-making machine, okay? So I'm going to use a washing machine as an example. And I always, don't think money laundering here, okay? It's a machine. It's an easy example, okay? The purpose is to wash clothes. It's made of multiple parts. If it fails at doing what it's supposed to do, which is washing clothes, there's a reason why. You have to find out why and fix it. Fix the part that isn't working, okay? Simple. Same thing with your business. Its purpose is to make money. It's made of multiple parts that we're going to talk about. If it fails at what it's doing what it's supposed to do, you got to fix the parts. Figure out why and fix the parts that aren't working. So what happens if your machine isn't really working very well? It's going to struggle to grow for sure, right? But you're going to be overworked, underpaid. I mean, I think business owners feel this overworked, underpaid thing a lot. It's just going to keep going that way. And you'll have to find a job. So what's ironic about that is so many business owners, especially solopreneurs, they really find that they just own a job at this point. They don't really own a business. So what happens is they own this job that's stressful, low paying, high demanding. They're working all the time, right? And why did they start a business in the first place? They really wanted control of their time, right? How many people in here actually own a business, already own a business? How much time do you have? Do you feel like you're working all the time? They want to control how much money they make, but guess what? If you're working all the time, how much are you getting paid by the hour? Are you controlling that? Probably not. So you really have to get past this hump, right? You're trying to get past this stage. You have to work more in the business. You're working for less money. And most business owners, they start the business because they're good at something, personal training, whatever it is. So that's great, but then it just becomes like it's just this job, and you have to do all the parts of running this job because you don't have anyone advising you, you don't have help, right? And so there's no steady paycheck, no one's guiding you, and all you know is you have to keep the money coming in. So you're working harder and harder while you're trying to do all the other functions of the business. So then these things start to struggle. I mean, you need someone to spend more time on marketing. Who's going to get the clients? How are you going to know if your pricing's optimized? How do you know what you need? Is there something out there that's going to make this easier for you? You're like, where is this guidance that you're going to get on all this? Knowing if your marketing's producing a return on your investment, are you even tracking it? Do you know where your leads are coming from, right? Understanding the numbers. A lot of people, I know, don't love numbers. It's just weirdos like me that are really good with numbers. And then, hiring, firing, managing employees. You got to call Spencer if you have employee problems, right? So on and on. More good news. 86.3% of all business owners are making less than $100,000 a year. Well, for some people, that might seem like pretty good money, but that is way too little, too much risk, too much of your time. For what you're putting into it, that's not enough money, right? You have the worst of both worlds. You didn't get the steady paycheck. You didn't get the control that you wanted, okay? So how do you get out of this cycle? we're going to turn your job into a business. And so you can do 3 things. You're going to be able to take money out for your personal use. You're going to use the money to grow your business and use it to increase its value. It's helpful if you know sort of your long-term goal, right? Some people actually start a business to grow it and sell it. If you need money down the road, or at any point in this, you need to have strong financial statements, right? Or you can't even get a loan. All right. So if you can get your business to make money, you can use that money to hire people, do marketing, improve your services, upgrade your technology, hire other experts to help you, hire better management. Maybe you want to expand and grow. You can buy more equipment to make your life easier, pay down debt, all these things. You can take time off. Who would like to take a vacation as a business owner? It happens. People do it. They really do. But you have to pay someone to take care of your business when you're gone, right? You just have to. All right. And you need the whole purpose of starting the business, remember that one? You should be able to take money out of your business. Okay? So that's what we're going to get you to. So every business, we're back to our machine now, machine concept. Every business has 16 parts, okay? Each part contributes to this machine generating money. You want to get familiar with each of these parts so you can figure out where you need to work on this machine. What do you need to fix to make this machine work well? Now, the parts are also called drivers. You guys have probably heard of drivers as accounting language, okay? So your job as a business owner is just to make sure your machine is running at peak performance. It's not to be running yourself ragged trying to service all your clients. You need to get to the point where you're making sure your machine is running at peak performance. Okay, now, a lot of you know, some of you might know cash versus accrual. I just want to cover it here because a lot of people really don't understand. So I tried to simplify it. Cash is really just what's happening in your bank accounts, on your credit card accounts, and it's being recorded historically. It's showing what was deposited and what was paid for. That's your cash basis. When it happened, it went in, you recorded it, right? Accrual is recognizing everything that's happening. If you invoice a client for last month, right? You've paid an employee to help you with that work last month, but you're not billing it till this month. So how do you know what your real cost is versus if you're on a cash basis, maybe you're not aligning which expenses go with these clients that were billed in that month, but you haven't been paid for it yet. And you have to be ready and know what you have in receivables coming down the road. And so the accrual method, a lot of people don't use because most tax preparers will tell you, well, everybody's on a cash basis. You don't have to worry about that. Just be on a cash basis. Well, if you're tracking your performance, you have to rethink that. Okay. That and your bank balance is always changing. So we're going to talk more about the cash flow part, but you always think you know what's going on, but you might be forgetting you haven't paid something yet, right? Your credit card payment wasn't done. Oh, I'm on a biweekly payroll and I had a third payroll come through. Like, right? You need to track all this and know it's coming. Okay. And for anyone looking at the spreadsheet, clearly accrual is the better way to track performance. Okay? All right. So each of your 16 parts is to increase one of these 3 areas. These are easy accounting terms for some of you, but I want to just review them in case you don't have a full understanding. Revenue, it's all income from the business operating, okay? That one most people know. Whatever you're charging people, whatever's coming in, right? Your profit is the income minus your expenses, okay? And then your cash flow is what you keep. Who in here thinks profit and cash flow are the same thing? None of you should raise your hand because I already kind of said that. Okay. So this is the cash flow equation. And I tried to simplify it. You don't have to memorize that. But this is me showing you there's more to it, okay? It's not just your net profit. So if you want to take a picture, now's your chance. But I'm going to run through a quick example that's going to help you understand. So let's say last month you made $50,000, okay? You had $30,000 in expenses. So you're thinking, I had $20,000 profit. That's awesome. Well, you're going to have to pay taxes on it. So let's pull $4,000 out and set it aside for taxes, okay? You're like, I'm going to take $10,000 because that's great. That was a good month. I'm taking $10,000. Oh, yeah, I had my last credit card was $8,000. I haven't paid that yet. So, whoops. And I ran payroll, but the payroll taxes weren't paid out yet, weren't pulled out yet. Well, now you're negative $5,000. So see how you can be profitable and have net cash flow, negative net cash flow. Okay, that money has to come from somewhere. So your job as a business owner is to make sure you get your revenue as high as you can every month. Now, that's what most business owners do. Okay, I get that. Most business owners are focusing on revenue. That's great. But I will tell you, I had a client come to me last year. They seemed very successful. They had 6 locations, 6 chiropractic locations. They had 2 MRI centers, a pain management clinic. They're making $30 million a year, negative net cash flow. So they were focusing on revenue and they were growing. There was no money left over, okay? More importantly, you want to get your profit as high as possible. This is where we're going to look at your expenses, what's going out, what's, where can we cut? Does it make sense? And I'm going to get into that more later too. Even more importantly, you need your cash flow to be as high as possible. Okay, so the 16 parts of your business. So we talked about these 3, revenue, profit, and cash flow. There are drivers for each one of these, okay? You don't have to memorize all of this. You don't even have to understand all of it. I do have, if you want, on the worksheet and later on, you will be able to download more details on these. But just to kind of go through them, for revenue, you do need to, why would you have to pay attention to leads or a conversion rate? You need to know how many customers you need to make the money you need to make, right? So then you have to know how many clients are using us versus other people. That's your conversion rate. How many of these leads are converting to customers? So maybe I need 3 times as many leads as I need customers. Well, that's going to have everything to do with how I'm going to go get the customers, right? So if you have a revenue problem, you're going to drill down on each one of these. Leads, conversion rate, your retention rate. Are your clients how long are your clients staying? Are you keeping your clients for about 1.5 years and then they move on? Like, you need to know that. You need to know your purchase frequency rate. Are they buying a supplement every month, right? Your average transaction value. Is your pricing where it needs to be? When we look at profit, your cost of goods, you have to know what percentage. This is going to fluctuate, right? The amount will fluctuate with how much you're doing in sales. So you have to know what percentage is your cost of goods. Marketing, I don't want to see marketing up beyond 15%. You got to keep marketing 10 to 15%, okay? Your payroll. If you're a service-based business, I don't want to see your payroll over 45%, and I see it all the time. You are not going to be profitable if you get much above that. Your overhead, 10 to 15%. So those of you that are paying way too much in rent or whatever, like, you need to keep your overhead to 10 to 15%. And then your other income, these are things that are just like, your interest income. They're the income and expenses not really related to the operations of the business. And then your cash flow. Days sales outstanding. Why do you think that would matter to your cash flow? If you bill a customer and they don't pay you for 45 days, is that going to make a difference for you versus getting paid in 10 days? Right?
If it's Walmart, it might be 3 months.
Yeah. exactly. And you're carrying those costs for the customers until you get that money. Your inventory outstanding. So maybe you bought too much inventory and it's not moving. That's just, you're carrying that cost. It's affecting your cash flow. You spent too much on the inventory, it's not getting sold. Sale or purchase of assets. If you buy equipment, that's going to decrease your cash flow, right? If you sell a piece of equipment, it just increased your cash flow. Your payables, we talked about that. If you're going to wait, I had a client who had a biweekly payroll actually, and he liked to pay his credit card right when he got the state. So he would bill his clients, pull it, he was an attorney, he pulled it over from trust, he would pay off his credit card, and then he had the third payroll come in that month. And he's like, oh my gosh, what do I do? And he had to pull money back in to pay his payroll. I'm like, well, why did you pay the credit card off? Like, you didn't have to do that. Well, I just like to because it feels good. Okay, but payroll is the number one thing that will cost you the most liabilities if you don't take care of that first, okay? And Spencer will tell you, there's no option to not pay an employee pretty much. So, and then paying down your debt. Okay, so you guys, the loan payments that you make on your debt, that's not on your P&L. That's not even in your net profit. So you have to factor that in. When you're looking and trying to forecast, you need to put those loan payments in there to decrease your cash flow. And then when the owner takes money out. Now, that's usually the problem I see is that the owner's just bleeding the business dry. And you got to keep enough in there. And I'm going to talk about that more in a minute, too. So if you improve any of these 16 things, your machine's going to run better. But if you can improve all of them, imagine how much better your business is going to be. So if you want to download the details on those 16 parts and what they are, see if you can go in and just download that from my website. And also, I have the website on the worksheet. You can go download it from there as well. Okay, so hopefully you guys got that. Okay, so now I want to talk a little more about the worksheet. So hopefully you have gotten through number 14. Okay? So turn it over if you need to. After number 14, it asks about personal and business goals. Why would I be asking about that? Why is it important to your business?
Forecasting.
Yes. Why do the personal goals matter? Do you have a child going to college? Do you want to pay off your mortgage? Right? Do you want a new house? Do you need more down for a new house? Your personal goals have everything to do with your business goals. But also think about why. Why do you want those goals? Where are they coming from? Sometimes when I'll ask my clients, what is your goal? What is your 5-year goal? And they'll be like, I want to make $10 million. Okay, why? Well, I just figured that, I probably want I want to take $2 million out. Well, okay, that's a different goal. What are you going to use the $2 million for? Well, I want to pay off my mortgage. I want to buy some investment property. Then we get into what they really are trying to do. But it didn't really have anything to do with the 10 million number, right? So that's why it's important to think about why. Then if you go further down on the worksheet, for those of you who already have a business, you can use your estimated real numbers. If you don't have a business, you can throw anything in that you want to. But I want to just talk to you about how you need to look at planning in your business. So you might have your year-to-date numbers, and you would put those in that first column. The second column is where do you want to end up this year in 2025? So that could be, this is how much revenue I want to make. I want to make sure my payroll isn't more than 30%. I want to make sure my marketing isn't over 15%. And you put all those numbers in. And then you look at the rest of the year, and you put it in your forecast column. Well, this is going to be, if that's true, if I'm trying to hit those targets, how much do I have every month for the rest of the year for the forecast? How am I going to meet it? So you really do have to plan ahead, and you have to know you have enough cash flow to make that happen, right? Okay, so you can do that if you want. Then at the bottom, we're talking about a net profit percentage. What do you guys think is a healthy net profit percentage? Any idea? It should be 20 to 25% beyond paying yourself. That might sound like a lot for a startup, but that should be your goal of where you're trying to get to, right? If you had to pay someone to do your job, you have to include that, right? If you're out there doing installs and you decide you can't do installs anymore and you need to pay someone to install, you have to factor that in, okay? All right, so that's your goal, 20 to 25% after paying everything else, okay? Your monthly draws. Well, what you are taking for a salary might not be what you really need. So maybe you're saying, I'm taking a salary of 2/3 of my net profit. What about the rest of it? And how much should you leave in there? Do you guys know how much to leave in your account? Minimum. Anybody? 3 months of expenses. At least 3 months of expenses, you guys. I realize you have to build it up to that. I get that. But that's really, and I've had people, you know, larger businesses that are like, I don't feel like I need 3 months. Well, okay, but did you know, you're a bankruptcy attorney. You saw what happened during COVID. You couldn't file cases for how long? Because they shut the courts down? How did you survive that, right? You have to have some money set aside, right? Okay. So then, and then you look at how much is left, and that's getting you closer to your cash flow, right? So now, do we have any questions so far? Am I moving too fast? Any questions? Okay, so far you're all with me. That's good. All right. Most business owners don't love numbers, and I get that. These are all numbers. Some people don't like numbers. That's okay too. So I want to talk about your accounting team. Now, I have had plenty of businesses come to me. Actually, you might know this one. I had one come to me. They raised $2 million, and their books were a mess. They were so bad. And the wife had been doing the accounting. And she's laughing to me about how she was terrible at math in school. But she was doing, out of $2 million, they could not come up with enough money to just pay a bookkeeper, right? Huge mistake. So that cost them thousands of dollars for me to clean up what I could, because they were trying to go out and raise another 40-some million or whatever it was. So this is why it matters. I had a church come to me. We've been meaning to clean up our books for a while, and that was thousands of dollars of cleanup, versus the gal that came to me and said, my husband's starting a plumbing business, and he wants me to do the bookkeeping. I told him I am not willing unless I get somebody to set up the books for me and show me what to do and what not to do. I'm like, where are all of you? Like, she sat with me for an hour and a half, you guys. At the time, that probably cost her $150, and she was on her way, versus the people that for thousands of dollars had to have their books cleaned up. Okay, so your accounting team, what does it look like? Most of you have a tax preparer. If you don't, please get one. I know a lot of people are relying on AI these days. There's not a problem with that other than AI only works if you know what to ask, right? That's the biggest problem I see. I had a CPA once give someone the wrong deadline, and I quickly came back and said, you're giving him the wrong deadline. Where did that come from? Well, I Googled it. Well, what exactly did you Google? Because that's not the deadline. And she was telling this guy he had an extra month to make his 401k contributions, and he didn't. Okay. They basically prepare the tax return. They'll calculate your estimated payments. Business owners, who knows that you have to prepare to make estimated payments from your profits? Yes, important thing to know. A lot of people start businesses and they don't realize that. Okay, And thanks, Sherry, for reminding me to point that out. Okay. Sometimes they'll meet with you before the end of the year, hopefully before the end of the year, because you don't want it to be too late for you to try to use some strategy to get a deduction that you could get, right? That's all, okay. But before I go on to bookkeeping, that's really all they do. It doesn't mean that some of them don't offer more than that, but that's their job. They take what you give them and they plug it into a return and they file it. That means if whoever's doing the bookkeeping put a $10,000 loan in income on accident, you just paid taxes on $10,000 that you didn't have to, because they're not going in with a forensic eye to make sure the data's right. They're just filing what you're giving them. Okay, your bookkeeper. This could be someone in-house. It might be a bookkeeping firm. It could be someone at your tax preparer's office. This sort of depends on what you need, right? If you're serious and you're tracking the performance of your company, you need a bookkeeping firm. Your tax preparer's office typically, doesn't mean all, some of them have it figured out, but often a tax preparer's office is only going to help you when they're not in their busy season. And so if you're trying to get monthly financials, you're going to be like, hey, it's been 3 months. Can I get my financials? Where are they? So a dedicated bookkeeping firm is always my first choice, but it's also the kind of firm I owned, but that was why. All right, so they enter the activity and reconcile it. Now, it does matter where you enter it. They're not just data entry, okay? Some of them will handle accounts payable and receivable for you, like they'll track it and pay your bills. They will give you some extra help in that area, because we all know it's like the landscaper with the yard that looks terrible. Like we don't get our own stuff done. It just doesn't happen. Okay, a controller, a lot of people don't realize a controller is just somebody who's sort of over all of the accounting functions. And so as you're growing, you might find that you want somebody who's just going to be over all these functions, okay? And sometimes your bookkeeping firm or your tax preparer's office will offer that as a service. And they can help with budgeting and whatever you need, okay? The CFO service is a little different. This is what I do now, and this is where you want to get more on the strategic side. So once your business has grown, really I'm talking like beyond $500,000 a year in revenue, and you're not seeing that 25% net profit, or you want to grow. Some people hit that ceiling around 500,000, and they're like, I have 2 employees. I'm charging all the money I can. Not really sure how to grow beyond that. Then you look into a CFO service. And this is where they're doing more analytical work, right? We identify strengths and weaknesses in the business. We work with the business owner on how to fix those issues. So it's more strategic. It's because you're trying to do something more with your business, okay? Now, some people come back to me and they're upset that the other people in their accounting team are not providing all this, but they're all trained to do something different. So you just have to keep that in mind. Okay, so I did leave my contact information on here. If you ever want to, I'm happy to help anybody that needs some guidance. And yeah, you just let me know. I'm yours. I'm happy to help out. And because I like Ewans.
Thank you.